Good morning. Welcome to Admiral Markets. Thanks for joining today on this 4th of May. My name is Chris, and today's focus is on the strategy side of things. We're going to take a look at the market, of course, but specifically also from an angle of a strategy. And we're going to take a look at multiple financial instruments. First of all, though, be aware that this webinar is shown to a global audience. It may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer, and you're also aware of the risk involved when trading. All right, I wanted to let you know about the deposit bonus. Probably already heard it in previous webinars. It's valid for April and May, the special 2-month window where you can capitalize on this offer from Admiral Markets if you're trading with Admiral Markets already, or if you're joining for the first time or second time, doesn't matter. It's valid for everyone. Basically, what it means is that if you make an extra deposit or a first deposit in these 2 months, that Admiral Markets will add capital to it, and you have to have a certain volume to unlock that bonus within, I think, 6 months. But take a look, of course, at the conditions and details on the website for all the info. But yeah, that's the opportunity of April, May. So could be very interesting for you to take a look at this and capitalize on that. All right. So with that said, let me quickly take a look at the calendar together. We had earlier this week, of course, the Aussie interest rate going down for the first time in a year, and at its very lowest point this century, that's for sure. Today we have some ADP news. That's always, of course, a bit interesting to take a look at that. We have a balance of trade on the CAD. We have PMI on the dollar. And in the morning session, we have some ECB meetings going on. And otherwise, let's see, pound has construction PMI at the usual 930. That could be an interesting one to see how that is developing. Let's see, Alif is asking me about yesterday's news. I'm not sure what you specifically mean. Are you talking about the US elections, perhaps? Just let me know what piece of news you're referring to. Maybe I missed something. That would be always good to know. Of course, let's take a look at the meantime at the heat map. And we can see that the euro odd, pound odd, big movers. Dollar CAD, Aussie to the downside, minus 2.5%. Mind you that 2.5, I mean, typically this is marked by a 1% border here, right? So this is, a big movement. Even on these pairs that seem halfway, they're actually about 1%. So they're actually already on the high side compared to the usual movement, right? So this is a big movement, big volatility as well. Aussie dropping because, of course, it had the news event triggering this big upside. And the dollar finally rising here yesterday when it made a reversal. We'll talk about that in a second. Pound now being second. That's a long time ago that the dollar took the first position here in its range. It was very quiet for a very long time. Now it finally broke that. So let's take a look at the charts now at the markets and take a look at some of these currency pairs. Beverly, thanks so much. Yeah, I was not really. We had some time off, but we were traveling a lot, so it was quite intensive in a way. But it's good to have a bit of a different schedule, I guess, for a week or two. So that's good. We were looking at some property basically as well, so it was a bit hectic to be honest. But yeah, it was still very nice. It was good weather, so that helps. Um, so with that said, we saw, of course, on the euro dollar and all the other dollar pairs, we saw some reversals going on here. We saw, or retracements. Let's talk about that in a second. But we saw some dollar strength finally, and it's not a scenario I really discussed a lot yesterday because I was more focusing on odd USD downside and euro dollar pound dollar continuation, and that often does happen if you have a morning session that is up. Then often you will see retracement continuation on these pairs. But yesterday that did not happen, and I think I didn't discuss enough that potential as well, that it just could be that. And I think that has to do with the wave analysis as well. It is something I did mention ironically in my wave analysis yesterday, but it's not something I like to necessarily include in the webinars because I know that not everyone is a fan of wave analysis, doesn't necessarily understand it or use it or think it's usable at all, right? Many people think it's a waste of time, think that you can't really, justify anything, the time spent on it. So now I'm not saying today I want to focus actually on wave analysis a bit. So I hope you stick around. We'll take a look at the markets too, of course. But the reason is because I think that, well, first of all, you probably know my opinion, but I think that wave analysis is a supplement. It just kind of connects, like a jigsaw puzzle, connects the dots. We have an impulse. We basically look at impulse and correction, fast price movements up or down, right? And corrections that go sideways. So we're looking at that. That's basically the first step. And once you do that, then the next step would be to say, okay, this is, you can start labeling these movements, these pieces of price action, these swing highs, swing lows. So we start to label them with numbers and letters. And that's basically it. You're just connecting legs, swing highs, swing lows. This is, one leg, then we see another leg, and then we see another leg, and then we start labeling them, right? And by then connecting these labels, we start to interpret and build a story. It's basically kind of like storytelling, but then using psychology of investors and markets to have a bit of a clue what could be the next step. So if you like looking at impulse correction, then you're already halfway there. And then if you add the storytelling to it through these waves, then you're basically doing wave analysis, right? Already. It's not that complicated. Now, using it actively or using it, for your own purposes of trading is perhaps another story, but is another dimension or is a bit more difficult. But I don't think it should be used. It can be used for trading purposes, definitely, but it doesn't have to be. It could just be a general guideline about what you could expect for this week or for the trading day, and it doesn't have to be your only focus. It doesn't have to be your only kind of roadmap that you use. And some traders do that, and that's fine. They use wave analysis for all trading decisions. And that could be a bit more difficult, right? Because that requires more experience. But if you use it as a supplement, as a reason to support your analysis, your decisions, your analysis, where are the key levels, where are the key decision zones, right? Then you're not fully relying on it, but you use it just to support or filter out certain things. I think that always has its use. That's how I use it. I do make some trading decisions based more on wave analysis than others. So I cannot say I always use wave analysis for trading decisions or I never use it. It's kind of in the middle. In some cases, it's a stronger role. In some cases, it's a less stronger role. That depends just how certain I am with my wave count. Sometimes I'm always showing a wave count here, right? But there should be a barometer next to it, really, from 0 to 1. Unfortunately, I cannot do it, but that says, I'm 25% certain about this count, but there are a lot of other options that are just as likely. Or I'm 80% certain about this count. That varies. I'm always showing what I think is the most likely, but it doesn't mean that the most likely scenario is the one that has a very high chance of playing out. It could be, right, the one that with the biggest chance is also one that has 80% chance of succeeding, and there's maybe a subvariant that has 15% and another one that has 5%. Right, so that's how I look at it. But I'm always showing the one that I think has the most probability. So with that said, let's take a look at the euro dollar regarding the waves. And basically, yesterday it seems like we ended the ABC correction zigzag. That I'm pretty sure of. Now, it doesn't mean that we cannot expand that to the upside. This could still become a bigger W, ABC finishing W, and this become an X, and we can go up for another Y. We already have 3 of them here, but yeah, there's nothing against saying that there could be a 4th. So from that point of view, that is a possibility. Now, it depends on how fast this downside develops and how it develops, whether a wave X is likely. Due to its speed, due to the close and reverse that we saw yesterday, I already have not marked this as a green 4 and have marked green 4 ending here. Actually, yesterday I had 3 ending here and saying wave 4 will be, probable that there could be a wave 4 sometime soon, and showed fib levels. Now, 4 didn't go down that deep, was very shallow in the current count, and yesterday morning we actually had a wave 5. Due to the strong downside, it seems likely that this is not a 4, but rather an ABC, rather a bearish momentum, or even if it is a reversal, it could turn out to be a 1, 2, 3, and then the 3 would go way lower. So one of the important things is this green trend line, the dark green one. And the reason is because an ABC correction could easily stop at the green line and bounce up again. It would be probably about halfway this upside as well, the 50 fib. But if price breaks below the green line, then we're probably looking at a wave 3 instead of C. Wave 3, of course, bearish wave 3, should go way past the length of wave 1. So if we're looking at a bearish impulse, like a 1, 2, 3, then 3 should really accelerate below the green trend line. If it doesn't, and if we see divergence between these bottoms, then we're probably looking at a correction we can expect a bounce. And then this is probably WXY. So at this point, whether it's an ABC or 1, 2, 3 is about 50-50 to me. I still chose ABC in this case because price is still above that green support trend line. But for me, it's equally likely. I would rule out that wave 4 is now, or give it a 1% chance that this is still a wave 4 due to the fact that we have such a bearish price action here. So I think there is a 95%, let's say, chance that the wave 5 of C has ended here due to this strength. But whether it's an ABC or 1, 2, 3, that remains to be seen, depending on how price reacts in this zone and to the trend line, etc. All right, so let's take a look at the euro dollar. And in my wave analysis, I was saying this is probably going to be A, and we're going to go up for B. So if we look at that in more detail, let's take a look. Let's get rid of some of these trend lines. All right. We see, first of all, the awesome oscillator here turning a bit. So that could also show that probably this swing high, swing low is completed. If you look at my time factor rule as well, 5 to 6 candles, basically from the very start to the very end, we've had a continuous flow of candles moving in one direction. Most of the candle highs, are higher than the previous. There are a couple of exceptions. Here is one or two. Here are actually 6. Here are 2. Here are 4. That's it, right? So yeah, there are a couple of candles that didn't post a new high. Most did. And that's, of course, a classical kind of confirmation of a bullish momentum. Now we had 1, 2, 3, 4, 5. So if the next 2 candles do not break this high, this is another kind of confluence that this upside is a pullback for a weakness for more downside. So by the, I would say, let me see exactly, this is, I always forget. By the end of London, I would say, we would probably have seen upside and then a failure here. And then throughout Asia and London tomorrow, I would expect downside. So my guesstimate would be, or that could even happen today, we could even see European up, but a rejection in London, for instance. All right, that's also possible. Now, could it be possible that this is still a retracement? If we put a fib from here to here, did the price use any? It kind of missed the 38.2 fib. Let's take a look at the 1-hour chart. All right. Now, the only point that I would probably change this, for the moment I think that's the most likely, is that if price makes an upside like this and starts to build a bull flag and then breaks that bull flag. That's the only moment that I would consider upside so likely that it could break this top. Until that moment, I would view this basically as a correction for more downside. Okay, so from that point of view, if we take a look at the hourly chart, we're already seeing a bit of a turn here. And as I said, this is probably going to be complete A, and we're probably going to go up to correct that momentum down. You know, everything moves in waves. So even though we had bearish momentum yesterday afternoon, doesn't mean that it will continue without getting a retracement. So trade ideas, if you're a wave analyst, is we could put a fib from here to here, considering the fact that we're looking for an ABC, right? And you can see that taking retracements on a low time frame is always difficult because you're running into resistance fibs pretty quickly. And that's always a bit of a trouble, especially on a lower time frame like that, right? Now, let me take a look here at some pivot points. Pivot points will be, or actually, it's already, I already know the pivot points, okay? You see the daily pivot point is at 115.29. That's actually the 38.2 fib, right? All right. Now, if I look at Nenet's system using AcuPP, that system actually generated a long right here, right? As far as if I'm looking at other charts here on the other PC, and I just noticed that. All right, so that's pretty quick. So you know his system is very quick on its feet in the sense that it's very adjustable to trading with momentum. Because if you would classically look at trend or momentum, this would still be in a downside. This is a very early kind of call for trading to the upside, but seemingly very accurate. And if you look at his results, obviously you can see that it is a very high accurate win percentage. I mean, he has, using that system, obviously, as he showed in his statements, making a lot of good profit. I'm looking for the win percentage, but I don't see that, unfortunately. I'll ask him what this win percentage was. But anyhow, So let's see how this retracement goes. But the entry there made a lot of sense from a wave perspective too, in the sense that if you look at divergence, for instance, on the 50-minute chart, you can see divergence between these bottoms. So a bit of correction, an ABC rally up to the daily pivot point at 38.2 fib, or the 50, or the 61.8, and a turn back down does make a lot of sense. Right? And you see price slowly but surely continuing that upside there. So even a wave analyst looking at an entry, as Nanette system, Accu system had said, would say, okay, that makes sense from a wave perspective because I do expect an end of A here, and I do expect a B. So even though momentum was down, making a long within that context makes sense. If we look at the internal division of this momentum, we can see 5 waves, and that's important because that gives us clue as well that there could be more downside to come in the future. 1, 2, 3, 4, 5, right? With a classical deeper 2, shallow 4, and diverges between 3 and 5, and the biggest wave being 3. So from that perspective, it looks very classical 1, 2, 3, 4, 5 to be either A or 1. So what we should expect here, because we're expecting a wave 2 or B, is either probably an ABC correction, right? So what could happen is that A could hit the 38.2 fib. We could see a bit of a bear flag, a bull flag, excuse me, because this is an A. This could be a B, and then we can see it go up to the C, and then turn around again. All right. So if anyone would be in that Accu setup, I would be saying take profit at the 38.2 fib probably, because that is about 35 pips, which is a decent amount for a 5-minute entry, right? And also it's just a strong resistance level. There's a daily pivot point, there's a quarter level, and there's a 38.2 fib. If everything indeed goes as accordingly and we get a bull flag, then on a 5-minute chart there could be another setup to the 61.8 fib. After which that could be maybe a reason to go short. All right, so now 5-minute chart makes sense, but how about other time frames? Hourly, you see, the thing is with an hourly setup is that there's not a lot of space here. Unless you're aiming for the 61.8 fib and take a long on this hourly candle, for instance, because it was bullish, maybe indicating the end of the downside, right? Maybe, right? Let's just take that as a hypothetical for the moment, just to make this point. Then aiming at the 38.2 fib is not a good enough, I think, target. Unless you really use a tight stop loss here, might still be okay. So it could have been even an hourly setup, actually, but that was an hour ago when, no, that was actually last hour. Okay, well, we talked too much about waves for me to register that. Anyhow, just to prove a point here, right? 4-hour chart could be another thing, right? If it's bullish engulfing twins, a bit of retracement here of that 4-hour, and then there's some space down up to that level. Now the bigger potential, considering the wave analysis, is downside from these fibs. Reason, because there's space to these targets at the minimum, considering the ABC, or even further if we get a 1, 2, 3. So one way would be pending order to 61.8. Now I'm not a big fan of pending orders, only if it's very likely, and this gets close, but I think still it makes sense to wait for an hourly chart, let these 1-hour candles roll up here, maybe even on a 30-minute chart, look for 5 to 6 candles here, not break this high, and take this weakness right here, like that. We could, for instance, see bullish candles, right? Then we see basically what I'm trying to indicate is bit of a head and shoulders potential like that. 5 to 6 candles, not breaking the high here, could indicate the right shoulder completed. And that's always a good way to take reversals, is by trading inverted head and shoulders or head and shoulders like that. Because then that momentum steam has, you have more confirmation that that momentum steam is finished. Now, if you're trading, that's all wave analysis. But how about if we tie in some other things? Like, for instance, looking at candlesticks and candlestick patterns. And if you look at the daily chart and you see this particular daily candle, an inverted hammer here, I think it's called. I don't know these names that well, but obviously it's a bearish pin bar reversal signal, right? And it's a pretty strong one. It have been a couple of days up, 6 days up, check. That's good. With an uptrend, yes. Do we have a big wick? Majority, 67% of the candles wick? Oh yeah, no doubt about that. Do we have a close near the low? Undoubtedly. I mean, it's actually, the low is right at the close, right? Check. Do we have a close that is in the previous candle close below it? Yes, check. So this is probably a classical example of pin bar. It's hard to imagine a better one, to be honest. So if anyone is trading the daily chart, it's easy, right? Take an entry right now, put the stop loss above it, 120 pips or so. And while the target, there are a lot of options, in fact, on the target, depending on your risk profile. I mean, depending on the risk appetite and how far you think this could go down. Conservative target could be that halfway mark, right? At 114.20. Well, that's not enough profit, but 113.70 would give a 1-to-1 trade. That's conservatively. 113 would be a medium, I would say, target, 200 pip target. But if you forget that swing high and you start to look at, this entire upside being completed, then it seriously starts to change, and you can put the fib like that, right? And you probably have to only worry about the 50 fib, and that could be the target, 110.60. That is a medium high target. If you're really looking for, let's say, a risky target, well, it also depends how long someone wants to stay in this trade. I mean, it could even be parity, but that could be a long trade. So, but that also would be dependent on whether this is indeed the turning spot of the entire correction, which I would be, in a way, it could happen, but the chances of that indeed occurring are just on the low side. But anyhow, regarding that's a few targets to think about, but obviously great pin bar. Alrighty. I think for a bigger reversal signal, we'll probably need this weekly candle to be bearish as well, right? If this weekly candle ends up here with a big wick like that, that could be a significant reversal signal for long term as well. All right. So I think that is about it. Very exhaustive on the euro dollar, but I think we discussed many of the angles, I think. Just taking a look at the oscillator as well. And this daily chart, of course, is choppy, obviously, but we also have to realize that there is some divergence here. Let me draw this purple. Like that. Definitely a single divergence, right? But now perhaps a double. Another thing to consider. Alrighty. So let's move on and let's take a look at, I guess, well, does anyone have a preference for the next one? Pound USD or dollar yen? Do you have a preference for either of those two or after that? Maybe the pound USD, why not? Huh? Pound USD. All right, there we go. Pound USD, same thing really. Also completed probably an ABC, and this is something that has had extensions to the upside many times, right? Getting some extra 1, 2, 3, 4, 5s within a wave 3 or 5, and that's just because the trend keeps pushing. And as price makes corrections like this, we get more confirmation that price is just making some retracement for more upside. So this is basically how wave analysis is flexible. It needs to stay flexible because you have to incorporate the new information, right? If you see a correction, that's something we need to use. It's not, we cannot say, oh no, we're not going to use that. I was thinking that it would be that way and it must be correct. Let's say I think that, for instance, this push up is the end of my fifth wave and that's it. Now, if I stick to that, even though I get information that this is looking like an ABC, no, but I stick to my original thought, that's not the smartest way to tackle wave analysis because that's ignoring the new information and just being stubborn, really, right? So being stubborn makes no sense. Specifically with wave analysis, but probably with everything, I guess. But anyhow, so we have to incorporate that to be more precise, and then we see, okay, it's looking like an ABC, so I would change my labeling a bit to incorporate that new information, and then make it that ABC correction as a wave 4, and that means that we'll probably get more upside. Right? Now, yesterday I had this marked as wave 4 going up for wave 5. But what if today again yesterday there would have been a new bull flag and again an upside like that? Then I probably would have marked within the wave 5 another 1, 2, sorry, the other way around, another 1, 2, 3, right? I would have done the same thing again. Right? But yesterday we didn't. Yesterday, finally, we got a bearish momentum that broke the support trend line, and that is, one of the important clues that changes the dynamic and indeed increases the chances of this being completed and a new structure starting. So if we look at the pound USD on this chart, right, you can see also that this channel has been broken. We had multiple divergences between the tops already. So yeah, from that point of view, there's a good chance that the dynamic is changing. We had bearish engulfing twins on the daily chart, strong signal after a lot of days up. So that's a candlestick pattern, a bearish candlestick pattern that also increases the chances of this upside being completed. Another piece of confirmation. I also said yesterday that I would like to see a 4-hour candle that is closed near the high, and it didn't happen, right? So there was no reason to go long yesterday afternoon. The bulls could not keep control, didn't manage to hold that candle, significant wick. Now, was it a big enough wick to say that's a reversal signal? I have my doubts. If you're aggressive, maybe some of you did. But I think that was not a good enough wick for me to consider that a reversal signal, personally. But risk appetite changes or depends from trader to trader. For me, that is not enough. It would never probably be enough. Maybe in some rare situation, I guess if there's a lot of confluence, like if it would have hit the 61.8 fib, maybe, for instance, that's not a rare situation, but maybe more confluence, let's say, right there. That would make me probably, yeah, would probably be enough. Considering the two trend lines, the 61.8 and the wick, yes, something like that. But this is halfway to fib to 50, 61.8. Not enough for me to go short, but also warning me that it's not good enough for long either. So that would be my interpretation. If that would have been higher, then that would have been good enough for a short and a reversal trade. Just my 2 cents. But anyhow, we got the break. We got the reversal based on that wick. It happened. And the same story. Probably going to get an ABC, zigzag, or 1, 2, 3. And you can dive into, lower time frames basically to understand and interpret the building blocks of higher time frames. The thing is that, of course, 4-hour candles, daily candles, they provide more kind of value, right? I mean, in the sense that if you look at a daily candle, there's been a whole day of trading before that daily candle has been closed. That means a ton of decisions have been made by a ton of participants in the market to make that candle happen. So obviously, when the daily candle finishes, there are a lot of investors and traders, institutions that look at that candle and try to interpret it. So it has a lot of impact, let's say. A 5-minute chart would not have that same impact, at least I would think, right? Just because it's such a small time frame. But it doesn't mean that the small time frames are not useful, because when we look and try to understand the daily chart better, the daily candle better, we can look at a lower time frame, because all of these 5-minute candles have led up to that daily candle, and we can try to dissect and interpret that. For instance, if we would see an ABC motion like this on lower time frames, then we know that despite the fact that the daily candle was bearish, it could have been a corrective candle still. But if we see on lower time frames 5 waves, and the cases could be made here of 5 waves, a bit shallow wave 2, but okay. Right here too, just like the euro dollar, then that is showing impulse. So it's another way of understanding kind of the character of the candle better and trying to interpret that information. All right, so yes, it looks bearish just like the euro dollar, and would expect an ABC zigzag at the moment. Now, it could happen that both euro dollar and pound dollar do that. It also depends a bit on the euro pound, obviously, which one might get more legs to the upside, which one might even break and get a new lower low. If, for instance, euro pound starts pushing up, the euro dollar could push up, but the pound just could be going sideways and might even break this low. Right, there's 5-minute divergence, but there isn't 15. So this could still be part of wave 4, in fact, and you still get the wave 5. This could still be an A, B, C correction within that wave 4. All right, so yeah, basically at this moment, let's see, we do have divergence on the 15-minute chart actually as well. Excuse me, because yeah. Still, there is a potential for wave 5 to push, but it doesn't look that attractive because there is divergence. So it could happen, but for me, it's not interesting to trade. Here, your dollar looks a tad different just because we didn't reach the zero line. All right, anyhow, back to the euro pound. So depending, of course, on what the euro pound will do and how that reacts and what the trend is, we can see trend is up. We did have a very steep correction, and this could be a correction of the correction before moving down. So euro pound is very mixed at the moment. But if I would say the pound seems a bit stronger because there's divergence between these tops. So from that point of view, price could probably get back to this support area before making a bounce there. I think it's a difficult one to interpret, the euro pound. There are a lot of mixed signals here. All right, anyhow, that was a quick euro pound look. So, but I mean, if I look at the euro dollar and pound USD separately, then to me, shorts right now do not make. I mean, they could move. Price could still kind of inch lower here, but ultimately do not make much sense at this moment. I would rather wait for price to make a retracement. That's my my main message. All right, and there we go. And once it's made the retracement, basically, that's when I think that shorts at this moment make the most sense. Let's see. Beverly is saying the vote on leaving the EU. Of course, Great Britain has a referendum June 23rd to stay, to remain, I think they say, and to leave. And Beverly is saying the vote on leaving the EU from Great Britain, think it may stay indecisive for a little while. And that's very true. I mean, from a long perspective on the pound USD and the euro USD, this bearish engulfing twin, a good one as well, could just be a reaction to back to the mean, and we can make a triangle from there. Absolutely. Very much agree. And maybe that engulfing twin yesterday and the pin bar yesterday on the euro is because price has moved away from its average a bit, has had a momentum, and it's kind of went quite far when considering considering the fact that a few weeks from now there's going to be a really important political decision, financial decision, so for Great Britain. So this could be just a move back to the mean, back to the average. And we might only get a breakout of this triangle, of these trend lines, either to the upside here, I'm talking about this one, or this one here, after that event. Yeah, I agree with Beverly. Beverly says that the pound has priced in a risk of leaving, right? This downside, this acceleration here could have been triggered or generated due to fears of Great Britain leaving. So that kind of bearishness, one could say, has already priced in the risk of that. And I think that makes a lot of sense. And the upside could just be a bit of a relief rally. I've read somewhere, I don't know exactly what the poll numbers are at the moment, but I read somewhere that a Brexit seems tad less likely looking at the latest poll numbers. I really don't know. That's the only thing I read at FX Street. So maybe that's why we see a bit of a relief rally, but ultimately is it going to escape very high or escape very low? Probably not, because no one knows for sure. So it makes a lot of sense that price just sticks in this range, makes a bit of a downside here, back to support, and then uses that as a bounce, and then back down until that moment. So totally agree on that. And not only that, the US might wait for that decision, right? Fed, the FOMC, they might be waiting for information from that event. Who knows? Although it's not a U.S. event, maybe they still want to see how that impacts how that decision is made. All right. So dollar yen, also same story basically. I'm not going to bore you with that exact explanations, but here too, pin bar at 105, right? And also pretty close to the 38.2 fib. Now you might wonder, hey, didn't it break a bit below that 38.2 fib? That's true, but you got to consider the fact that this is basically a 5,000 pip move, right? Or no, 50,000. Sorry, I'm getting it's so much that I'm even getting mixed up with the zeros. So anyhow, it's a huge move up, right? From 75 to 125. So if you get a small little break of 100 pips, now it's 100 pips. That might seem a lot, but if you're looking at this size of a move, 1 cent is not much. If price starts to rally here, right, it starts to really push up like this, then this is actually respect for the 38.2 fib on this weekly monthly chart. Not if you're looking at an hourly chart, of course. In that case, probably the whole fib would be broken. But if it stops here, I would consider the 38.2 fib bounce. We got support levels here, so definitely possible. Now, if this makes an ABC zigzag, like this, starts to show weakness and then turns around, well, then there's a good chance that price could be headed towards the 50 fib. Right? So if we get something like this, and price breaks below this future trend line here, right? Then we might see that breakout to the downside. All right, so let's move on. We talked a lot about the majors here and how wave analysis can tie in. Do you have any questions from that point of view? Do you have any questions on waves? Do you have any preference for a currency pair you would like to take a look at? Yeah, I think that definitely there could be a good amount of volatility. I think that, of course, if UK chooses to remain in the EU, probably the volatility will be there will be volatility, but I expect less of a volatility than I would say an exit. I think that would be probably a bigger kind of shock to the system. So more volatility. But in both cases, it's extremely important to be careful, of course. And if you're interested about reasons that, to what could be good reasons for Great Britain to stay or to leave, actually, Admiral Markets wrote a white paper, as it's called, giving their opinion on the matter regarding the Brexit. So that could be interesting. I think if you look at the Admiral Markets Twitter feed or Annette's Twitter feed or my Twitter feed, about a week ago, I think I tweeted that. So you can take a look at that if you like. So we have some other currency pairs to look at as well. But James, first of all, is asking, how does fundamental news influence wave analysis? And well, it's basically all about the psychology of the market, right? So whether it's fundamentals or technicals, it really doesn't matter. It's kind of the same principle. It's how investors and traders interpret all the information out there, and that all that information could be sentiment analysis, could be technical, could be fundamental analysis. So if there is, for instance, let's hang on, let's see, if we have the dollar interest rate, right? For instance, is back in the 10 years ago was going up like this, right? So the dollar is becoming more valuable. And the euro interest rate was higher, no, let's say it was higher, yeah, but the dollar started to catch up, okay, and pass it. Well, that's a fundamental analysis, of course, and you do the analysis and you expect that the US is recovering faster than Europe. So you expect that differential, the gap between those rates to increase. So, and if you look at the charts and you see at the same time your dollar are making on a daily chart, for instance, something like this motion, right? And it's past the 150 fib, then you could say, okay, this is a wave 1, 2, this is probably going to be a wave 3, and it kind of ties into what you're expecting from a fundamental too. And that wave 3 could be created by this fundamental aspect, for instance. So they kind of like are intertwined in a way, right, with each other. This is just an example. Ultimately, wave analysis just looks at how investors interpret how the entire market, the entire psychology of the market interprets all the information, and then they try to read that. So it really doesn't matter how or why the market moves as it moves, why those decisions are made. It just tries to look at the outcome and rationale that and make the best judgment of that. So regarding the pound yen, I think we talked about a 78.6 fib bounce. It kind of missed that, so that's a shame. But price is still respecting that level. It kind of broke this triangle a bit. Let me correct that like this. Still at the top of resistance at the moment. So if it breaks this resistance trend line, it could be a bit of a rally here. Quite messy euro pound yen, quite messy euro yen too. Not that interesting. Aussie yesterday worked out fine. If anyone managed to grab the 50 fib, great job. Now, unfortunately, in my case, I overanalyzed it. I was waiting for an ABC zigzag, and that happens sometimes to me when I start to dabble into too many details, probably, and just not flat out take a bit of a risk on the bounce here and say, okay, put the stop loss up in here or here, and even if it is ABC, I should be fine. At least I have one position on. Sometimes I have a tendency to wait a bit long, too long sometimes. So anyone who did manage to grab this candlestick pattern at close to the 50, saw price hitting the target as well. So that was a good 100 pips there to be made, and a nice move to the minus 272 target. This was a decent candlestick pattern, so could have been maybe possible. Not bad. I didn't manage though. I was waiting for a bounce. I saw this going sideways. I thought, okay, maybe it could still make that move up to the 50 fib. Didn't. All right, it was just too late already there. So yesterday I said there's a decent chance of continuation to the downside. I wasn't 100. Said there is still a chance that if it makes some bull flag, that there could be that this is just a news event candle, but seemed a tad more likely to me for downside. That did indeed happen. And if we look at the daily candle now, we see a decent candle. If we connect these bottoms like this, which is I think fair to do, we're only cutting through a bit of wick here. We have a trend line with 4 hits and a massive candle breaking below it. So here too, I think that's a good breakout. And I think if price retraces halfway of yesterday's candle, I think it looks good to 73.70, which is about 200 pips if 75.70 entry is taken, and a stop loss at 77.20 gives about a 1.3 to 1 trade. Now, if we put the fib on this entire downside like that, 50 fib is at 75.90. Now, if it makes a bear flag like this and hits the 38.2 fib, that too is worth considering as well, I think, personally. All right. Dollar CAD, I told you yesterday already, I'm not a big fan of trading this to the downside. Too much divergence, falling wedge, and finally it kind of got some momentum to the upside. But I really wasn't a big fan of trading it either way, really, because of the, I would say, massive divergence that never really saw any follow through. So, but eventually it did happen. Let's take a look at, now I don't think particularly there's anything to trade, to be honest, on the dollar CAD. I only see potential on the Aussie at the moment. Kiwi, not so interesting. It's in this channel. The Kiwi, perhaps if it gets down to this bottom, it could be a bouncing trade. It's still a bit lower. Let's take a look at Pound Odd. Pound Odd did not move much up. Actually, hardly any, right? Just going sideways like this. If price gets back down in here, I would say if it retraces back to the 78.6 fib, I would say, from here to here. 191, it could be still a bounce to the upside. All right. Well, that's basically most of the majors, I think, and major crosses. Quick look, oil was down yesterday, continuing its downside after the target has been hit. That's still my email address from yesterday. If you're interested in getting this moving average indicator for free, no problem, just send me an email like to this email address right here. And you'll get this moving average indicator. Yesterday, down day on DAX. And the question is, will it break the support trend line, basically? And we can try to read the wave analysis on this downside. And so far, it looks a bit choppy. We could have maybe considered the last recent momentum to be an acceleration. If this is a 1-2, and this is a 1-2, another 1-2 of lower degrees, right? Then it still doesn't add up because we went into, if this is a 3-4, 4 went into 1. You see that there? So that cannot be correct. So we cannot see a piece yet unless we consider, let's see, unless we consider this to be a 1, 2, 3, 4, 5, right? Right there or here. If that would be the case, it could be possible that this is impulsive. Or let me use different colors here. And the blue 5 could, finish in orange 3. In that case, this bottom is key because that price could not go into that zone. In that case, we would put a fib from here to here. And if this is an orange 4, we would expect price to go up to the 23.6 fib or 38.2 fib, max 50, but not above 50. Otherwise, the analysis is invalidated, right? And it's not an orange 4 anymore. But we would expect price to go up to one of these fibs and then continue down to the minus 272 target, at least. Right? That is if this is an impulse. It is possible, considering primarily because of the recent accelerations here. All right, folks, I guess those are a few of those indices, but we already looked at them yesterday. Let's take a look at some other currency pairs, but why don't you suggest one or two exotics, let's call them, or some minor crosses? Do you have any preference? Do you have any follow-up questions you would like to ask on wave analysis by any chance? If you're interested in sentimental analysis, by the way, you can see on the website, go to analytics, you can see market sentiment, and you can see the currency pairs, some commodities as well, and how that stacks up. $50.50 on the Kiwi. And of course, you can find some other analytics like technical analysis that Nenet is describing here, and fundamental analysis too. All of that you can find right there. Auto Traders blog, a lot of good things there. All right, webinars, of course. We got new webinars coming up. And we have new schedule for June and July. We got webinars on a lot of things, actually. We got price action. We did a poll earlier this week. Price action was number one, was number favorite, most chosen topic. So we followed that lead, and we organized 2 webinars in June for price action, part 1, part 2. Here you go. So you can sign up once for two webinars. We got also new strategy webinars and new Tuesday webinars for June and July. So you only have to sign up once for 2 months worth of webinars. Once for each day though, so twice, but still only twice for 2 months. That's good. And then we have a British referendum. We're talking about that on June 16. We have Fibonacci, 2 webinars, June 23rd and 30. News trading, how to trade with popular chart indicators, intermarket correlations. That's it. Breakout and fake outs. Those sentiment levels are real-time data taken from multiple trading service providers. So it doesn't seem like it's only Admiral Markets. All right, so let's take a last look. Let me choose one. Let's take a last look at why not? How about the pound CAD? So we had a great momentum to the downside on the weekly, obviously. And the daily has shown that too. But we do see a bit of divergence on the 4-hour chart. Let me actually just clear up this chart totally. All right, and we can see a bit of divergence between these bottoms. And we see also price kind of making a correction to the upside on the 4-hour chart. So on the daily chart, we see that too. We see a bit of divergence between these bottoms, although oscillator did not go back to the 0 line. We do see that a bit. All right, and we see a bit of correction. So how to interpret this? Well, we got to look back. I mean, from a wave perspective, this could be, for instance, an ABC, or this could be a 1, 2, 3, right? In any case, we need to interpret how this bearish price action is playing out. From a weekly chart, we see, maybe we can even start from the monthly. We can see that this has been a correction to the upside. Now, what is this correction? This is looking actually more like an impulsive wave to me, to be honest. This is more looking like a 1, 2, 3, 4, 5. That would mean that an ABC zigzag could bring price back to probably a deep fib before making one more upside. So if we put a fib from here to here, bouncing spots could be the 50, 61, 78.6 fib. So we should keep an eye on these fibs. Price actually came very near the 50 fib. Could be even considered a bounce there, maybe just a tad more lower before we might see the B part of an ABC zigzag before we continue with, let's see, the green C, right? So if you look at the pound CAD on this monthly chart, you can see that we could be completing the blue A of the green B. Soon we might start the blue B of the green B, and then eventually down below at a lower fib, 61.8 or 78.6 fib, we might complete the entire green B before we move up for green C, back into these resistance zones right here, right, and targets. That seems the most likely to me, at least at this moment. From a monthly perspective, if we look at the weekly perspective, the fact that we finished wave 5 makes a lot of sense here because we have divergence. What happens between wave 3 and 5? We should have divergence. Makes plenty of sense, right? So that's good to go. That all developed as expected. And this could have been the ending spot of 5. We could have 1, 2, 3, 4, 5 to finish 3. And this is a wave 4, and this is a wave 5. What happens with wave 4? It often goes back to the previous wave 4. That happened. There was divergence between 3 and 5, and then between 3 and 5 again. Wave 4, both green and blue were shallow. So that kind of plays out. Then we got this correction, right? Now that correction, let's take a look at the daily chart for that, had a very deep wave 2 or B, which makes sense. That's often the case. How about this part? Is this a 1 or A? Right? Because that's important. Because if this is a 1, 2, 3, or ABC is important. Why? Because if it's a 1, 2, 3, we would expect 1 more 4, 5. And that would actually, if it's a 5 wave, that would mean a lot of bearishness to be expected. If this is an ABC, then we would expect a rally actually. Right? So let's dive into this part and see if this is a 1 or A. So if we mark it here, it's somewhere around 25th of August last year down to October last year. So let's go to a 4-hour chart and see and go there. All right, this looks like a 5 wave down. That's fine. Looks like a classic correction, ABC. That's fine. All right. How about this part? Well, we see divergence between these bottoms. Do you see that? We see 5 waves. We could count 5 waves. 1, 2, 3, 4, 5. All right. But ultimately, after that, this 5 waves just barely broke this, and we have divergence between the bottoms. That should not happen between the 1 and 3. This is a 1 and this is a 3. Wave 3 should be the strongest on the oscillator. After that, we see a significant correction. So this is in ABC. If we put a fib from here to here, you can see price hitting only the minus 272 target, shallow target. So from that, if we go back to the daily chart, we can, in my opinion, conclude that that is not a 1, but an ABC, right? To finish in A, this is a clear ABC zigzag for a B, and this is a C. As actually that fits very well with what we're expecting from this A, because we're expecting a bigger correction, right? Actually, this could be, in theory, already the ABC correction, right? This could be A. This could already be the end of B, and we can go up for C. It's possible too, by the way. That's another scenario that could be just as likely. That depends how price will react here. If price starts to be very impulsive, we could actually be starting to see. If it starts to behave corrective, then it's probably this ABC leads to a bigger A. This is a bigger B, and we have a bigger C. So whether, this is a red ABC for more downside, or whether this is actually completing, this ABC is completed, and we have this going on, is difficult to know at the moment. That depends how price reacts here. What we do see is that if this is an A and B that we know, and this is a C, how far is that C finished, first of all? We see 1, 2, 3, 4, and this is 5. So probably yes. Probably yes. So it's not entirely impossible for price to make one more downside, especially if it breaks this trend line. I would entertain the idea of one more downside to the 50 fib. All right. But if it breaks, if basically these moving averages start to cross, I would consider this to be already in the bullish area, a bullish zone. And a bullish breakout, the bullish, not only the moving averages, but I would say, let's see if we can put some trend lines on it. You see these trend lines all broke already. Horizontal level is the only thing remaining. All right, so if this breaks, pulls back, could be some upside here. All right, so let me just quickly take this fib off. All right, there we go. So my point is that it does seem completed here. So it does seem that the correction is completed. So now the next task is, what is this? Is this going to be a correction for more downside, or is this a new trend start? So if we put a fib on this downside correction, major levels to think about are these fibs, but there's a lot of space because it's a big fib, right? So there's a lot of space to trade it to the upside before we hit some resistance. And Beverly has a good observation that this is a double bottom, also a reversal pattern. Indeed. Exactly. So that's all, in favor of some upside. But the next question, I guess, is this going to behave correctively? That would indicate that more downside, and the 38.2 fib is very important. Or 50, right? All of these fibs basically, all right? Or is this going to start to behave more impulsively? And is this actually a wave 1, a 2, and this is a wave 3? Or a 1 out of 2 of 3, for instance. That will indicate whether upside or downside is more interesting. Now, upside could still be interesting in this zone, even though it behaves correctively. But we have to be careful of these fibs, though. If we look down at this piece to interpret, that a bit better, let's take a look. 1 hour chart. Do we see 5 waves in this piece? If we do, because that's the very first upside, right? If we see 5 waves, that could be another confirmation that we're going to get an upside correction or an upside trend. And indeed, wave C has been completed here. So let's take a look at the lower time frame for more clues on the building blocks on that time frame. So, do we see a 5 wave up here? And it's not a perfect analysis. It's not something that we can always be certain of, but I think yes, it's okay. This looks like a wave 1, 2, and it's a bit of it's not as great as maybe other examples. It's okay-ish, and you could see 5 waves in it, right? It's not impossible to do so. It's not the best ever. I've seen better, but yes. Also important is that we do see also a pretty decent ABC correction after that. And however we draw the fib from here to here or from here to here, we see that basically price bounced off that minus 61.8 target, right, on this hourly chart. So yeah, it seems like this is a 1 or A. This is a 2 or B. And we are in a 3 or C. So if we put a fib from here to here, we can see price bounced off the 61.8 fib. All right. So the target, minus 272 target, is a shallow target. That would, if it only goes there, this is probably an entirely corrective piece. If it goes up to the minus 61.8 target, there's a bit more likelihood of a momentum. For me, this seems to be a good confluence at this moment. So yeah, if it breaks above this resistance with a good 4-hour candle, for instance, like this, and retraces that candle halfway, it could be worth along with the tight stop loss just below the candle and targeting probably this level with a trail stop loss below significant candles. Alternatively, we could look at the hourly chart and say, okay, if this is a 1, 2, 1, 2, and this is a 3, then we could put a fib from here to here and see if there's any reaction basically to one of these two fibs, right? If there's, after the news event, of course, there's a news event. If there's a bounce at one of these fibs, then this could be a wave 4. We might see the continuation of the wave 5. Now, this does not look like a great wave 3, to be honest, on a 50-minute chart, but okay. On the outer chart, it still doesn't look that bad. This could be a wave 4. But in that case, price should not break below the 61.8 fib. It should not go below the green line. That's the invalidation point of a 1, 2, 3, 4, 5 development. So a bounce here for wave 4 within wave 5 of C or wave 3, or the breakout, right, makes sense, I think, for the moment, unless price goes below the green line here, which is the cutoff point. Got a top here, resistance here that can become support. If that's not a bouncing spot for continuation up to the minus 2 or minus 61.8 target and the 23.6 fib, then the upside doesn't look as strong. It looks more corrective. Now, just because price gets up to these fibs doesn't mean it's right away impulsive. Right? Then it depends how it reacts. If it moves up there and it shows a bull flag and then starts to break again, you got more and more evidence that this is actually a trend, an uptrend. If, however, it gets up to that target and it starts to show a deep correction, it could still be a bouncing spot down in here up to the 38.2 fib, but all in all, it's looking more corrective. Does that make sense, what I just said? Any follow-up questions on this specific like pound CAD story that we're discussing right now? Any follow-up questions there? Just take your time to write that in the chat. In the meantime, let me take this small pause to tell you that Nenad is going to take a look at his price action trading school at 6 p.m. today. And tomorrow, same time, Thursday, 6 p.m. Central European time, 5 p.m. Great Britain, British time, or +1 GMT. Multi-time frame scalping. And then next week, we got a same schedule, but different webinars, of course, Monday, Tuesday, Wednesday, Thursday. If you're interested in getting the moving average indicator that I mentioned, by all means do so by writing through to this email address, of course. You can get that. Also, if you're interested in signing up for the free trial with Nenad's AccuPP system, by all means feel free to do that as well, of course. But this moving average indicator, I have it on all the charts, as you can see, so that's, in my opinion, always a great help. All right. So with that said, I think we can wrap it up for today. Thank you so much for joining us in these webinars. Hope to see you tonight and tomorrow, and wish you all great trading. Cheers.